Hello, and welcome back to Grow Wealth Together. We're not talking about stock tips or trading signals today. We're diving into the structural reality of wealth, as seen by financial heavyweight Robert Kiyosaki. This is deep. Kiyosaki frames the entire battle for wealth as a fight against the Grunch of Giants, the massive institutions designed to perpetually fleece us. This includes the Federal Reserve, the Wall Street banking system, and even the traditional education system that programs us to be obedient employees. He supports crypto because it is inherently anti-grunch, decentralized, transparent, and operates outside the corrupt debt-based fiat system. They are the people's money. But here is his central critique. Worrying about whether Bitcoin is going up or down is peeing in the ocean of money. It's focusing on peanuts. It limits your focus to a single asset's valuation, not the infinite opportunities of controlling cash flow. Kiyosaki argues that the old system will collapse. Those who understand the flow of money, the system that creates wealth, not the asset's price, will inherit the future. This structure is called the cash flow quadrant. Get ready to learn the cheat code. The cash flow quadrant is Kiyosaki's core roadmap for structural migration. It defines exactly where your income comes from, and therefore how the government can tax you. Understanding this is your first step toward financial sovereignty. The left side, E and S, the tax trap. This is the poor dad's side. E's, employees, seek job security. They are taxed first, and they are taxed heaviest. You get smoked. S's, self-employed specialists, freelancers, doctors, lawyers, suffer the highest taxes, often up to 60%. Why? Because they are essentially buying themselves a job, and the tax code is designed to punish personal income. The right side, B and I. The rich side, B's, big business, own systems that operate without their time. I's, investors, are insiders who structure deals. Crucially, the B and I quadrants enjoy the lowest taxes, sometimes 20% down to 0%. This isn't a loophole. It's by design, it's the law. The tax laws favor B and I because they create jobs, stimulate the economy, and fuel the banking system. The conversion trap. Simply trading a crypto asset is useless if you take the profits and buy ES side liabilities. Imagine taking your Bitcoin profit, creating a massive tax event, and then buying a personal home that drains your cash flow every month. That's an L. The goal of structural migration. The job of the smart investor is to convert E/S income or I-side store of value assets like crypto into B and I-side assets that generate monthly, tax-advantaged cash flow. The right side of the quadrant is where you control the game. Kiyosaki's most powerful lesson is his view on debt. He argues that since 1971, the US dollar has been pure debt, so the rich use debt as a tax-free weapon. You must first separate assets from liabilities. An asset puts money in your pocket every month. A liability takes money out. Your personal home? That is a liability. It bleeds you dry every month. The mechanism in action, the tax shield. The rich borrow money, debt, which is tax-free cash, to buy assets. Kiyosaki borrows debt and uses it to buy cash-flowing real estate. Tax laws allow him to depreciate the property, creating a tax shield. The rental income cash flows tax-free into his pocket, which he then uses to buy more non-cash flowing stores of value, like gold, silver, or Bitcoin. The result is the ultimate structural advantage. His BI assets are effectively buying his stores of value for zero cost from a tax and capital perspective. That's financial genius. To execute this, you need to understand the BI triangle and remember his core truth. If you can't sell, you have no income. Sales and marketing, communication, is the direct multiplier for controlling cash flow. Kiyosaki has given us the blueprint, but now, let's execute it with the Grow Wealth Together framework for BI migration. 1. Stop trading. Start leveraging. Stack your stores of value. Bitcoin, gold, silver. Stop worrying about the daily price noise. Focus your energy on generating income from your economic lever, your BRI assets. 2. Focus on cash flow control. Use Kiyosaki's simple financial statement. Ensure your asset column is perpetually feeding your income column. The biggest difference between a millionaire and a broke person is control of cash flow. 3. Find the tax advantage. The goal is to move income from E/S, high tax, to B/I, low tax. Consult a tax strategist, not just an accountant, on legal ways to use depreciation. Start small. Think about your first cash-flowing real estate investment. 4. Embrace financial education. Study the monetary system and the cash flow quadrant. Your mind is your biggest asset, but only if you educate it outside the broken system that trains employees. Don't be a lucky crypto millionaire who blows their money on a whip. Be a structural wealth builder who uses debt, real assets, and financial education to achieve financial sovereignty beyond the Grunch of Giants. If you want me to break down the BI triangle or show you how to structure your first good debt deal using these principles, leave a comment below. We build wealth together. Don't forget to like and subscribe.